Hey, what's up guys? John here. Phoenix, Arizona ranked top 4 most housing permits issued throughout all of 2020 to present. The amount of homes, apartments, townhouses under construction right now in Phoenix is unreal.
Arizona does not have enough affordable housing.
New affordable housing coming to Phoenix.
This dirt lot in East Phoenix will be home to more than 200 affordable housing units.
The city ranks #1 in the country for homes built not to sell, but to rent.
I'm gonna give you a tour and show you how bad this situation is. For example, I just took my family out to eat. I'm looking out through the sun visor, and I see this massive project. I mean, it looked like they were building a college campus. I went and looked at it, and I'm like, okay, that's pretty crazy. I drove 800 feet, maybe 1,000 feet, see another major project. I get on the freeway, I see another massive project. I look across the freeway, another massive project. It's one project after the next. After dinner, I went to go get coffee with my family and look across the street. What do I see? More and more and more construction. It's endless. It's on every corner in Phoenix, Arizona. And I just asked myself, who's gonna be able to afford to buy these homes? But then I got the answer. The answer is gonna shock you. It's billionaire Wall Street firms and private equity investors that are doing backroom deals with America's biggest home builders to acquire entire communities for 60 and 70 cents on the dollar, to remove the risk from these home builders, wondering if they're gonna find a buyer that's gonna be able to buy in today's high interest rate environment. Well, they don't have to worry any longer. Blackstone and KKR and these big firms will step in and buy them, and they're gonna build them for rent for America.
If you want to buy a home in Arizona, a new study says it's going to cost you a lot more than just a few years ago.
The city ranks #1 in the country for homes built not to sell, but to rent.
But the more you look into this story, the more you'll see that what's unfolding in Phoenix is coming nationwide across America's most popular cities. And in this video, I'm gonna break it down and show you exactly what's going on. I'm gonna show you real homes that are being built. I'm gonna walk these properties, tell you what the numbers are, and how this is gonna flip the script on home ownership in America forever. Please hit the like button. When you hit the like button, YouTube will share this content, educate more people about what's really going on in our economy and our housing market. And if you'd like to fix your credit to position yourself for funding, maybe you wanna invest in distressed real estate, get a business loan, you want to put yourself in a strong position to get any type of loan for this upcoming recession, we'd love to help you at my company, GreatCreditFast.com. That's GreatCreditFast.com. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, or any issue at all in your credit report, go to GreatCreditFast.com, click the link in the description just below this video, schedule a free call for tomorrow. Take a look at this. So this property, everyday basic home, right? A nice little 2-car garage, 3 bedrooms. You know what the average home price in Phoenix, Arizona is right now? It's almost $490,000. That's pretty crazy. If you've ever driven through Phoenix, you'll realize it's a working class community. This isn't, high paying lawyers, on every single, every stop sign and every corner you see some lawyer that's living in each and every house. It's not like that. It's a lot of everyday, hardworking Americans that live in Phoenix. And at today's mortgage rates, with the average down payment, which is 6% for a first time buyer, guess how much the payment on something like this would be? The answer? Over $5,500. $5,500 for a deal like this, which is unreal. That would mean you'd have to make $15,000 a month to live in this property that I'm gonna show you right here. 2 beds, right? Here's the entryway. You walk through this entryway, and then you have 2 bedrooms right here to the left. Here's the entry for 1 bedroom. There's the entry for another bedroom right here. And then here's that bedroom. And then you have another bedroom to the corner here. And then here's the center island, which you can see the plumbing right there. And then a little living room, kitchen, common area leading out to the backyard. That's $5,500 a month. You know what private equity is doing, which is fascinating, is that, remember Mark Zuckerberg? A lot of people talked about this mortgage rate he got for 1.05%. 1.05%, which is half of the interest rate that was issued back during when interest rates were at the all-time lows. So back then it was, a little over 2% or 2.5%. He was able to get 1.05%. It was not because he borrowed against the stock, because he's Mark Zuckerberg. That's why. He's Mark damn Zuckerberg. And everybody would love to lend him money. Well, when you look at who's buying these deals, it's the BlackRocks of the world, these large private equity firms. And so you think about it, they're going to be able to buy these deals for 60 or 70 cents on the dollar. So rather than it being $488,000, they'll go buy it for $350 or $3.25. And rather than getting an 8% mortgage, maybe they'll get a 4% mortgage. So they can buy this entire property for, call it $2,500 a month, $2,200 a month, or even less. And then they rent it out for $3,000 a month back to the new property owner, or the new tenant rather, that they think they're going to be, this is their home, but it's really just an apartment. It's the same thing with this one. It's the same thing with this one, and on and on and on. And so when you think about how this is going to, what the repercussions are going to be, and how this is going to reshape the entire housing market in America, it's shocking, really. Because think about this. Phoenix, during that peak height in 2021, average cap rates, and so if you don't know what a cap rate is, this is what real estate investors use to buy multifamily property. So they'll look at the net operating income. So you think about it like this. There's an apartment building, a bunch of units. They'll look at all the rents, they'll add them all up. Then they'll remove the expenses, maintenance, they'll remove, repairs and whatever the cost would be. They're not going to take into consideration the mortgage. They'll just remove their cost and they'll see what the profit would be for each month. They'll multiply it by 12 months in a year, and they'll divide it by, in Phoenix, it was about 4.5 to 5%. And so that number, they'll take the entire annual number divided by 0.05, and they'll say, okay, that's how much I'll pay. And so Phoenix, they're way overpaying for these properties, not taking into consideration the hundreds of thousands of new units that are going to be built. And now what's happening is all these units are coming to market, but they're not coming direct for a buyer, they're coming for rent. And so there's more and more supply. And so what does that mean? Rents are continuing to fall here in Phoenix, Arizona. And as mortgage rates are at all-time highs, and property insurance jumped between 50 and 100% over the last couple of years on most of these property owners, it's a bloodbath for these real estate syndicators and a lot of these people that bought all these overvalued deals. And so you think about it like this. I have this theory that private equity, what they will likely do is they'll try to acquire as many of these sites, these communities as possible. They'll rent them for as little as they possibly can for the first year or 2 years or 3 years, possibly 4 years. And the reason they'll do this is because they know that about $2.7 trillion worth of debt that a lot of these syndicators, a lot of these real estate investors are holding, they have to refinance. And if they have to compete with these very, very low rents that are happening on, in all these other communities, it's going to continue to erode the value of those assets, meaning it's going to be much harder for these investors to be able to hold on. And so it's going to be like a series of dominoes. So if they keep it very low for, 2, 3, 4 year period potentially, then they're going to be able to acquire market share, then jack up the prices across the board. Think about it like this. Remember when Facebook first came out, they started coming out with these ads and you could advertise on Facebook for pennies on the dollar. It was super cheap. And, everyone loved to advertise back then. And then Facebook realized, hey, we got market share. We got all the attention. We have all the data. We know everything about all of the consumers. We know what people's shopping habits are, who their friends are. This is worth a lot more than what we're charging. And, business owners, they don't have a better alternative. So we're going to increase rates a little bit. We're going to increase them a little bit more. Oh, we're going to acquire Instagram, acquire WhatsApp. We're going to get more and more data. And then we're going to use this data to hike rates even further. And this is the same exact thing that Wall Street investors are going to do. They're going to start sharing data amongst each other. They're going to work together as a team to blow out mom and pop landlords. I'm not saying this to, be dramatic. I'm not saying this to, be a downer, but looking at it factually, looking at it like a capitalist, this is what would make the most sense. You don't think that all these big Wall Street firms are friends? That they don't share information? They don't talk about deals together? They don't do joint ventures together? They do, right? This is what they're going to be doing. They're going to be acquiring all these communities, working together, and they're going to be doing some really, really, really big things in the American housing market. So if you are somebody that is looking to rent, you know, and now is probably a good time to rent, honestly. Now, maybe the next year or 2 years, save as much money as you can, buy something, buy a really nice home, a home that you'd be really comfortable living in. And regardless of what, you know, the adjacent rents are, this would be your property, a home that you own. Because over the next couple of years, rents will be, I think, a lot lower than they are now in many areas, not all areas, but many. And if you can buy something, it might feel like you're overpaying on a month to month in the short term, but I'm telling you, over the long term, once they gather all this market share, you're gonna realize, hey, I'm way better off. I am way better off owning my own deal, my own home, and having control over my own cost. Because you think about this. If you're a private equity investor and you're like, hey, I'm gonna buy this deal and it's costing me, you know, X every month, I can rent it out for Y. I'll make a little spread in the beginning, but then I'm just gonna be able to continue to hike every single year. Hike rent, hike rent, hike rent. And there's nothing that these property owners can do. Well, that's a pretty powerful position to be in. You essentially control the living standards of that person, that occupant. And that's what's happening right now. I think Phoenix, Arizona is going to be one of the biggest bubbles that we are ever going to see pop inside of America's housing market. I think we're going to see something really, really big here. And I think America needs to get prepared for it, to follow all these trends, all these markets, all these areas. And if you do, you know, my opinion is that he or she who has the best information, that is willing and able to move forward, they're financially prepared. They're ready, willing, and able to move forward. They have the cash to do it, and they're ready to move. They're going to be able to take advantage of things when most people are just going to be scared. Because I think we're going to be walking into a time when a lot of Americans are just going to be point blank scared. They're not going to know what to think when the music stops. And it looks like right now, music is slowly stopping. Let's have a conversation about this below. If you'd like to fix your credit to position yourself for funding or financing, we'd love to help you at my company, GreatCreditFast.com. That's GreatCreditFast.com. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, or any negative item in your credit report, go to GreatCreditFast.com. Click the link in the description just below this video. Schedule a free call for tomorrow. Catch you next video.